The new HMRC rule that will change everything. Are you ready? If you submit a self-assessment tax return, it's time to get ready. The way you submit your self-assessment tax return as a self-employed and/or as a landlord is changing, and so you will need to prepare if you haven't done so already. And so in this video, I'll be revealing what this change is, whether this change applies to you, when you will need to follow this change, and what you need to do to prepare to easily navigate this change. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co. Accounting and Tax Services. From 6th of April 2026, if you are self-employed and or a landlord with a gross annual income of over £50,000 per tax year, you are required to submit 4 quarterly updates and 1 final return. You're making it 5 submissions to HMRC. This system is called Making Tax Digital for income tax. Again, you are required to keep digital records. These are basically your self-employment income and expenses, your rental income and expenses, indicating the date, the transaction details, and the amount on a digital platform, on a digital software compatible with HMRC's Making Tax Digital. You can use a software compatible with Making Tax Digital for income tax that can create these digital records and submit the quarterly update and the final return for you. Alternatively, if you're currently using Excel spreadsheets, then you need a bridging software that can transfer the data from the spreadsheet onto the software and then do the quarterly updates for you and also do the final return for you. So in all cases, you will need a software that is compatible with HMRC's Making Tax Digital. This means you cannot do away with a software compatible with Making Tax Digital. You need to start looking for one. The only digital records that you need to keep are the self-employment income and expenses and rental income and expenses. You do not need to keep any other digital records for your other sources of income, such as employment income, such as bank interest, such as dividends, and any other sources of income outside these two. HMRC uses previous tax year's information to determine your eligibility. So, for example, from 6th of April 2024 to 5th of April 2025, if your gross income from self-employment and or from renting a property is over 50,000, you need to join Making Tax Digital for income tax from 6th of April 2026. The gross income can be only from self-employment or a combination of both. So, for example, if your self-employment gross income for the previous tax year 24-25 was 30,000 and your income from rental property was 21,000, together you get 51,000. This means you've met the criteria, and so you will need to join Making Tax Digital from 6th of April 2026. If you only have one source, your total gross income must be over 50,000 to join from 6th of April 2026. Again, if your total gross income from 6th of April 2026 to 5th of April 2027 is over 30,000, then you will need to join Making Tax Digital from 6th of April 2027. And finally, if your total gross income from self-employment and or from letting a property is over 20,000, you need to join Making Tax Digital for income tax from 6th of April 2028. So these are the dates and the income eligibility criteria you will need to look at to see when you will need to join Making Tax Digital for income tax. If you are a UK resident landlord, then your overseas income from lettings is also included in Making Tax Digital for income tax. If you own any of the rental properties jointly, then you will need to keep your own digital records, and the other owner will need to also keep their own digital records. You will only report your share to HMRC. If you are a non-UK resident with a UK property, but you don't have any national insurance, then you can't join Making Tax Digital for income tax. But if you are a non-UK resident and you have a UK rental property and you have a national insurance number, you will need to also join Making Tax Digital for income tax if your income is over the thresholds I've already explained. Currently, the Making Tax Digital for income tax applies to self-employed and all landlords. If you are a limited company, you are not included in Making Tax Digital for income tax currently. If you are a limited liability partner or in partnership, you are not included in Making Tax Digital for income tax currently. If you have found value so far, please subscribe to our channel. This will help us grow and reach more people who may also find this useful. And don't forget to hit the like button to send us a signal that you are finding value. What do you need to do now? We're going to discuss 3 options. First option is to do and prepare everything as you're doing now. If you are completing your own self-assessment now, you can continue to do so by yourself. But you will need to look for a compatible software, and you will need to spend time to familiarize yourself with that software. You will also need to spend time to do your own bookkeeping to ensure accuracy. Since this is a new system, doing it yourself means you will spend a lot of time doing this instead of concentrating on your business. And again, that can even lead to some errors of a kind because you are not familiar with the system. But one thing to note is, if you do it yourself, you get to spend time with your business to know how the business is doing. So you get a better understanding or insight into your business. And that helps you to highlight 1 or 2 things that are not doing well to change it to grow the business. So that is the first option. If you choose to do it yourself, it will be time consuming and it will move you away a bit from your business because it's a new system. The next option is to hire a professional who will take over everything for you, who will look into the affairs, who will do the bookkeeping, who will ensure an up-to-date updates for the quarters have been submitted and on time. And then the final return is also submitted and on time as well. This will allow you time to concentrate on your business to grow it, whilst you leave everything for the professional do it. That way, you won't need to spend time looking for the software. You would not need to spend time learning about the software. The professional takes over everything and look after your affairs. That is the next option. The last option is assessing whether a limited company will be good fit for your business, especially if your income is over 50,000. For tax efficiency, you may consider assessing whether moving to a limited company be best for you if limited company can save you even more tax. With that, you will need to do the assessment with your own accountant or tax advisor. Or if you need our help, we are currently doing the assessment, you may contact us to assess whether a limited company will be a good fit for your business. These are the 3 options going forward that you need to consider which one will be best for you to navigate the Making Tax Digital for income tax easily. For more knowledge about penalties, the dates for the quarterly updates, we have this video for you. Please watch it next. As always, all our videos are for education purposes and should not be used as a tax advice or any form of advice. Personal tailored advice, please contact your own accountant or tax advisor, or please contact us for tailored advice. I hope this video has been useful. If it has, please subscribe to our channel and don't forget to hit the like button to send us a signal that you have found value in this video. Thank you for watching.